Hey guys, welcome back to another video. In this video, I'm going to be talking about General Electric, which we can see year to date is up almost 70%, whereas the rest of the market is only up 16%. But GE has a bit of an interesting story because it's been exploding recently. We can see over the last year up almost 100%. And this came mainly as a result of a split and a restructuring that the company has been undergoing most recently as a result of a change in strategic leadership with their CEO. Before, this used to be a conglomerate company made up of aerospace companies, healthcare companies, and energy companies, along with a bunch of other companies. But now General Electric is mainly an aerospace company with their energy sector, GE Vernova, splitting off into its own company, and its healthcare sector, GE Healthcare, splitting off into its own company. GE Aerospace, otherwise known as GE, focuses on manufacturing jet engines and continues to be a strong revenue generator. GE Vernova is focused on renewable energy production through wind, hydro, and grid energy solutions, as well as power production through gas, steam, and nuclear solutions. And GE Healthcare is focused on providing digital healthcare infrastructure and data analytics to help diagnose, treat, and monitor patients. The idea to break the conglomerate company up into three parts came as a result of decades of stagnated growth for General Electric. The company reached its peak in profitability in the early 2000s, but it was negatively impacted by the 2008 financial crisis, as well as a lack of strong leadership and management. And so due to this financial pressure, GE began restructuring the company in 2017 with a focus on aggressive cost-cutting measures, selling off discontinued operations, reducing its workforce, and improving overall efficiency. We can see from their annual report here that they reported their earnings results for the full year of 2023. We can see they showed revenue of about $68 billion, which was up 17% from $58 billion in 2022. And then we can see their earnings results came out to about $9.1 billion, which is up almost 2,000% from earnings of only $51 million year over year. A pretty massive increase, obviously. We can also see if we go to this income statement right here, this shows their earnings results for the first quarter of 2024. Total revenues came out to about $16 billion, up 14% from $14 billion in the first quarter of 2023. And they showed earnings results of about $1.5 billion, which is unfortunately down about 80% from $7.3 billion. And the reason for this large decrease here is because the larger earnings amount in Q1 of 2023 came from General Electric's investments in GE Healthcare, but that has since been separated from the main company. So all of the revenue or mainly all of the profits, as you can see right here from the other income line that came as a result of their investments in GE Healthcare in Q1 2023 don't exist in Q1 2024 because the companies have now successfully departed from one another. So now we can see this intrinsic value calculator that I have here to calculate the intrinsic value per share for a General Electric. I'm using a growth rate of about 4%, which has been the growth of their free cash flows for the last 5 years of about 3.88%. And to calculate the discount rate for their weighted average cost of capital, I used this calculator right here. Then based on these metrics, we can see that GE basically has an estimated intrinsic value per share of about $51 per share, which means that at the current share price, they are way overvalued. We can see right here they have a PE ratio of about 53 times earnings, trading with a market cap of about a little under $200 billion. But that being said, they have been growing pretty fast, so it could still be a buying opportunity at the current share price if they continue to grow at this rate. Obviously, 188 billion is a pretty big market capitalization, but seeing a 100% return from 200 billion to 400 billion wouldn't be as big of a deal, especially lately with a lot of the companies that have been doubling or tripling in market cap most recently. So we can see right here, I did a competitor industry analysis comparing GE to Lockheed Martin and Boeing, two of their main competitors. It looks like for profit margins, GE is doing the best out of the three companies, We can see they have the best gross profit margin, the best net profit margin. They have actually middle of the pack return on equity, with Lockheed Martin having the best return on equity. They also have the highest PE ratio, the second highest price to cash flow ratio, and they do pay a dividend, although it's not as high as Lockheed Martin's. And obviously, Boeing is not a profitable company. So from this list, if you wanted to judge the companies based on profit margins, you'd probably want to give it to General Electric. But based on dividend yield and also price to earnings ratio, it looks like Lockheed Martin is paying out a higher dividend return to their shareholders, and they're a little bit cheaper valued compared to the PE ratio for GE Aerospace. Lastly, if we compare GE to other companies we've looked at in past YouTube videos, we can see the top 5 companies so far that were trading at a good share price compared to their intrinsic value per share. GE wasn't one of these companies. GE's share price was higher than their estimated intrinsic value per share. For growth rate, GE had a growth rate of about 3%, which definitely isn't good enough to get them onto this table, and they paid a pretty small dividend yield compared to the other companies on this table. For profitability, we saw GE had profit margins of about 26% and 13%, which isn't good enough to get them onto the top 5 table for gross profit and net profit. But if we're ranking companies based on revenue and earnings growth, GE comes in 7th place with 14% for Q1 revenue growth and 9th place with negative 80% Q1 earnings growth. We can also see that for 2023, actually, I should change this because this is the revenue and earnings growth for all of 2023 instead of just Q4. But I put here that GE basically reported growth of 17% and 1,700% for Q4 2023. But I'll fix this because obviously, as we saw from the video earlier, this isn't just for Q4, this was for the full year. But you can see the other companies on the list that reported really good earnings and revenue growth as well. GE historically has actually been doing pretty good. They've shown up on all of the past tables for Q2 and Q3 for 2023. Pretty impressive earnings growth at 193% for Q3 and 98% for Q2. So obviously, because of this restructuring that they've been undergoing as a result of the new management, their company has been growing pretty rapidly with more of a concentration and focus on their aerospace engines. Lastly, if we're judging the company based on stock performance for the last 5 years, GE over the last 5 years has increased 241%, which puts them in 10th place on our top 10 table here, NVIDIA at the highest with over 3,000%. So let me know in the comment section down below what you guys think of General Electric. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.